PD, Priscillo, Sufyan,
No.
Subhan, Noon, Momo, Job.
Yes, sir.
No, sir.
Good, good. Okay. Now, so if we make another summary, so remember how we are going to extend it. So all of you already, did that. So I'm just going to be repeating a little bit fast here. So on the bank side, what is going to be written? Banking errors, deposits in transit, and outstanding checks. On the book side, we need to write down bank collection, ETFs, EFTs, service charges, interest, revenue. Remember, revenues will be positive, payments would be negative, right? And the book errors. Now, our today's learning objective is, first of all, evaluate internal control over cash receipts and cash payments. So, because we already talked about in our last lecture that cash is the most sensitive and also the blood of any organization, right? It is easy to steal. So, how we can add another layer of protection on our cash? So why we need internal control specifically on cash? Because it's easy to steal. All transactions ultimately affect cash. So that's why we have to make another statement which is publicly required. We call this cash flow statement. Right? It is so sensitive. So cash receipts should be deposited quickly, and companies can receive cash over the counter and through the mail. So there are two possibilities that company receive cash. One is over the counter, you need to pay cash, you need to go to the counter and deposit it, or through mail. So on both these you need to establish some kind of control here. And how you can establish that? By separating the duties, those who are receiving the cash and those who are depositing the cash. And what is the depositing responsibility? You need to deposit as quickly as possible. That's it. If you receive through mail, please notify that. So that person who received the mail, he is not allowed to deposit. He can only hand over to that person who is allowed to deposit, so that you can minimize any potential fraud triangle here, whether it is motive, whether it is realization. All right. Now, cash receipts over counter, how we can handle that? When you are receiving the cash, how you can do that? Number one, you need to install point of sale. You go to the Metro or Carrefour or the big superstore, they have some kind of barcode scanner, right? When they open the barcode scanner and when you receive the cash, they enter it and the tray comes out. All right. So tray is not like you can open the tray whenever you want. No. When you press cash receipts, you enter it, then it is going out. So you can check it out. Okay, how many times the tray just popped out, and how many orders you make. If they are coincide together, it means it's going good. But if an employee is constantly, opening the tray for like more than the sale orders or the payment side, so then remember that there is some fishiness going on. All right? Okay. Here we go. So customer should be issued receipts as a proof of payments, and sales associate turned in cash drawer at the end of the shift. Right? If there are two persons, then they need to shift to the other person, and please do recording at that. Okay, when I left this seat or table, there was this much cash inside, and I would be handing over this one. So everything is electronically recorded. Combined with other cash and deposits, accounting department reconciles sales per terminal to cash drawer. So this is a flow chart here. So remember, when you receive cash through a mail, You either you receive checks or either you receive this one. So remember, there are going to be two effects. First, the mail is going to be informed that person who is receiving or who has the responsibility to take out cash. He must inform the accounting department and deposit to the treasurer, and treasurer is responsible to deposit to the bank, right? And they need to notify it to the accountant or controller who keep track. So remember this one, it will be reflected in bank statement. When they receive the bank statement, they can verify through reconciliation, okay, they have submitted it, bank has collected on our behalf or something. All right. Now, controls over payments by check. So remember, nowadays, it's because check itself is an internal control tool, because signature is going to be needed. There is a check number. There is some kind of barcodes that recognized by the bank. There are dates, right? But if you are paying through electronically stuff, then remember, check is signed by some official person, and if you are electronically transferred, remember it is also authorized by some official person. It's not like that, the responsibilities of transferring electronically is, they have more than 2 people or 3 people or 4 people. If you do that, then there's going to be a blame game. I didn't do that, he must be doing that. So you need to, if you need to hire 2 or 3 person, remember they must have their own logins and passwords, separate login. You can keep track how much they have transferred or they have taken out, and it should be backed by some evidence as well. All right. So we just successfully completed out the electronically funds transfer, and now our purchases and payments. So when you want to purchase, remember that person who is handling the goods, he must be separated from that responsibility, those who are paying to the suppliers. So a purchase order must be made. So when you receive the goods, there is going to be a receiving report. Okay, goods have been received. So you present it with the invoice and all the documents, you take approval, and then you go to the authorized person who either will write you check or transfer the funds electronically. So like I said, everything is backed by some proof. So here, purchase order is made, and who is going to make it? Remember, company is going to issue that one, need approval and all the stuff, and there's going to be inventory. So when goods are transferred to the company premises, they must be having some inventory report, receiving report, and some invoice, how many goods or how much of the dollars are needed, what is the transfer charges, transport charges, and all that stuff. And then company issued directly to the company or supplier's name, not somebody else's name, so that you can minimize this fraud triangle. So control over purchase and payments before signing the check or approving the EFTs. The Treasury Department should examine the packet to approve all the documents, all the things are already approved and agreed upon, so that they can issue cash. Now, one last one is the petty cash. So what is the petty cash? It is small fund to make minor purchases or to support daily routine. For example, when prime customer comes, you need to offer some, cold stuff, beverages, carbonated drinks like Pepsi, cola, coffee, tea. So a company must maintain a petty cash for small purchases, like you need to buy pen, pencils, paper, stationery. Normally, these are, you buy in bulk for the whole year or a whole month, but still, if something happens, you need this kind of petty cash. So remember, you need to allow only at least one person, not two or three, one person to the custodian for the responsibility of the cash and its accounting. So everything, if somebody is coming to you, okay, I need to buy a pen, give me the pen, give me some money. It's not like that. You just give them money as that. You need to be, there's going to be a small document. You need to sign it, okay, and you need to verify that, okay, this person has, purchased a pen or something. Okay, a set of amount of cash must be determined. How much cash you can spend in one day. Okay, you cannot spend more than $1,000 in one day. Maybe your petty cash is 10,000, but you are not allowed to spend more than $1,000 a day. And if you need that, you need approval from higher authorities. Voucher would be prepared at every step, and they're going to be impress system, which means sum of funds plus paid voucher should be equal. So you need to verify that, okay, $1,000 if you purchase some printing cartridge or something, it must be verified with the voucher. Okay. Now back to our numerical stuff, which is very important here. So before going into that one, let's take a 10-minute break so that we can be mentally prepared to digest all this internal control, and then we are freshly able to go through understanding of the cash budget and others stuff for paper pattern and all the stuff. Okay, so see you after 10 minutes. Let's take a break. Okay, class, welcome back after the break. Okay, now we move to our final section of our topic here, that is construct and use a cash budget. So what is cash budget? First of all, a budgeting is a financial tool, a financial planning tool to coordinate business activities. And if we talk about specifically cash budget, it tells you the planned receipts and payments. So how we are going to construct it? Number one, we started from the